Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for June 14th, 2017. Well, I got to tell you, the market is absolutely fearless right now. There is no fear at all in the market, and we continue to push higher, even though we have a huge amount of data coming out this morning. There seems to be no concern whatsoever about all of that data that's about to be dropped on the market here. So first off, this morning we have the CPI, consumer price numbers, which have been weak, and they're not expecting anything better today. Retail sales have also shown some weakness, and they're kind of attributing that to wages not really moving up and things like that. The folks just aren't spending like they normally would, and so that number is expected to remain somewhat weak as well. Business inventories comes after that at 10 o'clock. Business inventories have been pretty flat and actually going to show probably a little bit of a decline today. At least that's the expectation. And then we have the big petroleum status report this morning. Oil has been one of those drivers for the market forever. And if we happen to show a build in supply, that would probably move a lot of these oil companies that are starting to stabilize a bit, would probably move them lower, and they could take the market with them. So we want to see that supply to continue to shrink and kind of follow this little, it's just a slight trend of supply shrinking. Then we have the big data of the day, and we can expect a lot of choppiness and a lot of volatility around this announcement at 2 o'clock p.m. when the Fed makes its decision or announces its decision on interest rates. So there's a really good chance the market will become very quiet ahead of that, and then it'll become very violent as soon as that news happens in reaction. And remember, then we have the Fed chair, Janet Yellen, does her press conference at 2:30. So it's going to be a very active day in the market. And right now the futures are pointing to a 40-point gap up, which leads me to believe that we are potentially set up for whipsaw price action, where we get that, that gap up and drop because of all of the data. Now, I don't know that that's going to occur, and I certainly don't want to predict that. I just want to point out that the potential is there. We could gap up and just continue to run because we don't see any fear in this market whatsoever at these highs. Now, yesterday the the Dow closed at a brand new record high, showing all kinds of strength, and we're gapping up into even a new record this morning. And that's what gives me that worry, that gap up and drop potential, those whipsaw price actions that can be pretty challenging for any trader, but for the new trader, they become devastating because the natural instinct of the trader is to kind of chase into the market when it seems so happy, and that's when those drops can occur. So be really careful as you approach the market this morning. The spiders yesterday, or S&P 500, it didn't make a new all-time high print, but it made a all-time high close, and showing strength here, popping out of this little price consolidation. Right here, again, no fear in this market. If we take a look at IWM, the Russell here, held support, showed positive buying, bullishness, pushing to the upside here, which is nice to see because IWM, for such a long time, really hasn't participated in this market. So if it's going to join in, we could have join this party to the upside, we could have a nice strong market. And then last but not least is the Qs. Now the Qs really damaged themselves and technically broke the trend. Now I'm going to be very watchful of this because as I mentioned yesterday, we have a price resistance level right, somewhere between here and here. And any rally back up in here that starts to falter, I would expect the potential of at least a test of the low again, possibly even a new low if that were to occur. So there's a lot of damage here that has to be corrected. And I'm not going to trust too much here in the Qs until I see this pattern get corrected. Okay. In fact, what I see is a considerable amount of distribution or rotation that could be beginning to happen out of the tech sector into other things. So watch carefully, be cautious. Now, I'm going to take a look at the VIX here. Now, the VIX here, once again, notice where we are. And I've got this area here that used to be what I call the danger zone. We dip below that danger zone regularly here lately, which is showing us no fear. But I want to point out something here and point out just how quickly fear changes to panic. And we've seen this several times here lately, where all of a sudden we get that spike in fear. Now, it happened here. It wasn't as long lasting, but we're getting these shock waves down here that make this market very difficult to trade. If you are struggling right now as a trader, if you're having trouble here, you're not alone, okay? This has become very violent and a lot of whipsaw price action, a lot of choppiness in here, and it's because of this overconfidence, I think, in the market right now, or shall I say complacency. And then when things start to get shaken, everybody runs for the door at the same time. Panic kind of sets in. Now, I'm not suggesting that's what's going to happen here. We can stay down in this area for quite some time. Look how long we stayed down here in this range before. So we can stay down here for a long time, but I'm just kind of warning that you need to be really cautious or really watchful of price action, because these shock waves are beginning to show up more and more as we're up here at these highs, testing these levels. And big shifts, big reversals can happen, and they can happen really fast. So the last thing you want to do is be chasing into a market like this first thing in the morning when it's gapping up. We want to let the market settle. We want to let it shake itself out. Let it catch its breath. Don't be that person that's charging headlong into danger. Wait for the better trade. Wait for the better position to get in, and it will settle. It'll show us if we watch price action. We don't have to rush. It'll tell us which way it wants to go if we just sit back and watch without that that overall need to chase or to rush. It will give us the clues, okay? So just be careful, be cautious, and as we approach these new highs. Right now, we've got a lot of data coming out, and I'm just really astounded ahead of the FOMC and everything else that this market is showing so much strength in the pre-market. That makes me nervous. It makes me want to sit on my hands, and that's probably what I'll be doing a lot of this morning, is just sitting on my hands. I'm gonna put up my feet and I'll watch the show, and I will wait for my entries to occur where I can see a clearer picture. So that's my thought for the day, and I hope everyone has an awesome day. Hey, if you're watching this for the first time, please do me a favor, click that subscribe button on YouTube, or if you're watching this on Facebook, hit that like button and follow button so that you can get this information regularly, because I do put it out every day. And please feel free to join in on my series that I'm running on YouTube of a method for consistent profits. I'm finding that a lot of folks are enjoying that series and getting a lot of good information out of it. So please feel free to partake that information at any time. Everyone have a great day. Right Way Options members, I will see you all soon. And by the way, RWO members, and if anyone's listening to this, do not take these trades. Do not take these trades. Abbott position, our position in Abbott is looking really good. And with the push in the market this morning, we have all the potential in the world for this to continue going up. Currently in Abbott, we're up 22.52%. I want to stay with that position. Our longer-term hold in Microsoft is doing incredibly well. We're up 49% at the close yesterday on that trade. Everything is looking good on that position. The Walmart position up 14.81%, looking really good there. And the Western Digital position currently holding 89.93% return on that. So at the moment, we've got no losing trades in the portfolio. And let's kind of keep it that way. Let's manage those positions, and let's be cautious and careful as we move forward for our next trades. All right, everyone, take care, and I will talk to you soon.